Welcome to PersonalFN's video learning session. We often hear how important it is to start saving and investing to meet your financial goals. But little is said about selling investments. Remember that redeeming your investments at the right time is almost as vital as making them at the right time. When we don't sell our investments at the most opportune time, they may generate low returns and take you further away from achieving your objectives. If you're wondering how to know the right time to sell your investments, well, that's really a million-dollar question. While this could be viewed more as a subjective question, in this video, PersonalFN will discuss certain parameters that can help you decide when to redeem your investments. 5 factors to consider while selling your investments. Number 1, market conditions. Market conditions play an important role in determining the value of your market-linked instruments such as stocks, mutual funds, bonds, etc. Selling instruments when markets are at a high could help you achieve a significant profit on your investments. Then the next is investments that generate inadequate returns. If you have invested in an instrument that has been generating poor returns, especially in the wrong time frames of 3 years or 5 years, you must get rid of them before it is too late. Investment objectives undergo a change. When a mutual fund scheme brings about a major change in its investment objective, which isn't as per your financial or personal objectives, you must redeem that fund. Company with unfair practices or low credit rating. Immediately redeem the investments when the company whose stocks you have purchased or the mutual funds whose units you have bought has indulged in any unfair or fraudulent activities, as such businesses or companies cannot be trusted and will prove to become holes in your financial bucket. Need to rebalance your portfolio. Portfolio rebalancing is correcting the deviations in the original asset allocation. For example, assume that initially you have invested 70% in equity, 20% in debt, and 10% in gold. After a few years, equity grew to 80% and gold to 15% of your portfolio when their values increased. As a portfolio rebalancing exercise, you could cut the financial exposure from equity and gold and redirect the money into debt fund to achieve the asset mix you had started off with. So when to rebalance your portfolio? When deviation of a particular asset class crosses the preset limit. Say your original equity allocation of 70% increases to 85% and you have earmarked the deviation limit of 10% in the initial allocation. This is when it becomes necessary to rejig your portfolio. When there is a change in financial circumstances, if income reduces, then your risk appetite might also reduce. In such a scenario, you might want to reduce the funds allocated towards risky asset classes such as real estate and equities. When there is a change in your financial goals, in case of additions or deletions in the number of your financial goals or the amount required to fulfill your goals, your stipulated asset allocation would need to be altered. When you have a windfall gain or loss, this might cause your risk appetite to reduce and might want to lower your exposure to equities. Nearness to financial goals. When you have adequate time in terms of number of years to meet a financial goal, you can afford to expose your portfolio to higher risk, which might enable you to create more wealth in the long term. But as the timeline for this financial goal draws nearer, prudence advises you to shift exposure from risky assets to relatively safer debt instruments to preclude the wealth erosion in years to come. Age plays a role. As you progress in age and arrive closer to retirement, it is necessary to move towards safer avenues such as debt and money market instruments. So you should be investing in fixed deposits, small savings schemes, or debt funds in accordance to your investment horizon. Change in the outlook for a particular asset class. Although PersonalFN strictly recommends investors to follow a goal-based asset allocation, some of you might like to follow a tactical asset allocation approach. Under this, the portfolio is rebalanced depending on the outlook for various asset classes to take advantage of opportunities and generate superior returns. PersonalFN is of the view that both the activities of making investments and redeeming them must be as per your financial plan and asset allocation strategy apart from the above mentioned parameters. We understand that not many people have the time or the expertise required to make financial plans, determine where and how much to invest, or when to redeem them. Hence, taking the help of an experienced and a qualified financial planner can be very fruitful to meet your financial objectives. Thank you for watching. To watch more videos from PersonalFN, subscribe to our YouTube channel now and do not forget to share below your feedback on this video.